Thank you for tuning in to Starkey Multifamily Podcast. I have with me a guest who has over 8 years experience. He's done 9 total syndications, over 1,500 units. He's currently under contract for his 10th one. So please welcome Aaron Katz. Hello, Aaron. How are you today?
Hey, Reed. How are you? Thank you for having me on.
Yeah, great. That seems to be a pretty hot topic, the co-sponsorship. There's been a lot of talk about how to structure that. Lots of different talk about what's right and what's wrong on that. Tell us how you structure the co-sponsorship.
Sure. Well, again, it's going to be different for every syndicator and, of course, every relationship and every deal. It could be its own isolated case-by-case situation. No, on my deals, though, I am listed in the company agreement and in the legal documents as an asset manager. And I'm available to, and so are my co-sponsors. Anybody that raises capital for a multifamily syndication has to be legally listed as an asset manager in the legal documents related to the syndication. So in my co-sponsorships, myself, the other asset managers are listed. However, because I want to take a little less of a hands-off approach once the project closes and let my co-sponsors be the primary active day-to-day asset managers. They're usually the ones that are compensated. They're the ones that are getting that overage that comes from the split that the third-party management company is going to ask to be compensated for running the day-to-day operations of the property, and whatever the LLC has agreed to pay on a monthly basis to the asset manager as a compensation fee for managing that asset. So essentially the way that the documents are written up is that the person that I'm co-sponsoring the project with, they're going to be the ones that are compensated as an asset manager, even though I am listed as one, and I'm available to them in a consultation basis based on my experience level. Usually the people that I'm co-sponsoring with, maybe one of the reasons why we're co-sponsoring in the first place is the value that I bring based on my long track record and resume in multifamily, my reputation, which I think is excellent among brokers and sellers out there, which is going to help my co-sponsors to land the deal and be awarded the deal in the first place, which obviously if you don't win the deal, then you have no deal, to get in and raise the capital for it and get closed and then operate profitably and successfully for ourselves and for all of our passive investors. So generally, yes, I assist in the capital raising on the front side, but then I essentially want to be largely passive on the back side, and I'm not compensated as an asset manager. In some of those agreements, I have had it written in, though. Obviously, all company agreements have a provision where asset managers can be voted out if the members of the LLC, and all of our entities are LLC entities that are structured our syndication deals, if the passive members decide that the asset managers are not doing a good job, then they can vote them out with a 2/3 majority, I believe it is, in our company agreements. And I usually have it on my co-sponsorships written in that if that is the case, then I would step in and then become the active asset manager, being the compensated asset manager, overseeing the property, working in conjunction, obviously, with whichever third-party property management company we have overseeing day-to-day operations on the property.
Going back to that first deal, had you invested passively or been a key principal before that, or was that your first multifamily altogether?
That was my first multifamily, Reed. I actually never as much as owned one single family property. I decided to dive right into multifamily because I liked how it was set up as a business where you leverage the time and money. It's been set up with systems and teams. I come from a business background, small business ownership, so it was really just a matter of transitioning and taking my business background from other businesses and then plugging them into that multifamily model. What I lacked then was the specific knowledge and education related specifically to multifamily investing, and that's why I chose to partner up and learn under Brad Sumrock. But I also brought in my knowledge, know-how of business, and what really attracted me to multifamily is I loved the time, freedom, and scalability. And we talked a little bit about scale before we even jumped on the recorded portion of the podcast today, and how you could take multifamily and leverage other teams and other systems where you can build your portfolio from above, but then still have a terrific lifestyle where you're not committed and down deep in the details of your property on a day-to-day basis. And that's the multifamily business model, the way that I learned it. That's the multifamily business model, the way that I live it. And it's worked out very well for me and very well for the people that have invested in my projects over the last 8 years. I'm very relationship-oriented guy, so really believe in being communicative with the people and teams that I trust on my properties. At the same point, I also know when, having been a business owner and been in management in the past, when to back off and just to let good people do what they do and do it well. And I see some syndicators, I think, that are way too down in the details of some of their properties, which number one is going to prevent them from growing a larger portfolio, because growing a larger portfolio takes time and space, but it also steps on the toes, I think, sometimes of the management companies and letting them do what it is that they do and do well.
Let's go back to that first deal. What made you decide to go with a 90 unit? A lot of people, like we talked about before we recorded, the single family, everybody seems to think, well, we got to start small. I have $100,000 to invest, so I can go buy a house today. And they don't think that $100,000 can be the risk capital for a $3 million apartment complex. So what made you do the 90 unit? And then also, why Texas? I assume because you just lived there, but did you look anywhere else?
Yeah, Texas, just because I do happen to live here. I live in Plano, which is a North Dallas suburb. So I know the Dallas-Fort Worth Metroplex really well. I've lived here since the mid-90s, and obviously it's a top multifamily market in the U.S. So obviously the familiarity, and then Dallas-Fort Worth just being a terrific place to invest in multifamily, I decided to be here. And that's really where I focused my efforts on over the last 8 years. I'm certainly open to co-syndicating projects with people that have their boots on the ground in other areas. But as far as the projects I've done thus far on the syndicating side, they've all been DFW based. Now, we've passively invested in some deals outside of DFW. When I say we, I mean my wife and I, and you can see her over my left shoulder right there.
Yeah.
Nice photo from Hawaii that we took a few years back. But as far as why 90 units, and that did kind of tie back into your last question, which I remember. Well, I had the business background, Reed, so I didn't feel, and I understand sometimes people feel they want to move from single family to multifamily, or they feel even if they do go right into multifamily that they want to get a couple deals passively under their belt because they feel that they're going to learn some things that are going to help them later as a syndicator. But I really felt, given my personal background in business, that I had the skill set ready to go. I just did not have that industry-specific knowledge related to multifamily. I mean, business is business at the end of the day. It's, income minus expenses, right? Mm-hmm. And what's left at the end of the day and how you operate your properties. So business is business, but I didn't know multifamily. So that's why partnering up with Brad and learning from him in the beginning, and now continuing to this day here 8 years later, is so beneficial in staying on top of the market, and also being plugged into an ecosystem that has thousands of investors, because these are the people that I form the SEC compliant relationships, being primarily the base of my passive invested equity when I go in and do these large syndication deals. But that was it. It was just identifying on that first deal something that would support third-party property management, because I talked a little bit ago about leveraging the time of other people to create the life that I wanted to live. So I wasn't interested in self-managing. At the same point, I didn't want to go out there and on my first deal go after a big deal and be competing against super big fish if you're looking at 200-300 unit deals. So I kind of identified that space of 60 to 100 unit as being where that property asset of that size would support third-party management, but yet it would be a place that I could potentially compete against the buyers in that space. So that was how I identified the 60 to 100 unit space on my first deal. And as I said before, the deal that I did end up getting under contract was a 90 unit deal in Arlington, Texas.
That's amazing. And not a lot of people make that on a first move, and almost everybody wishes that they would have. So that's awesome that you jumped right through there. I'm sure Brad had a lot to do with that.
Yeah, he absolutely did. And, like I said, and when he left that prior organization was when I was just going under contract on that first deal. So I remember being a little bit apprehensive because the coaching that he provided up to that point had been great. And then he was leaving the organization that at that point, and then later he launched his own. But like I said, he continued to mentor me through the process. But I can also say, though, that it does fall a lot on the individual. Brad can provide the education and give you all the information that somebody needs to go out there and be successful. But it does take that person being a massively action-oriented person. And I had a tremendous amount of belief in myself. And essentially what I did, even before I had a deal lined up, is I met everybody that I would meet at that mentoring organization's events that Brad was with at that time. I'd get them in my database, and then I'd meet with them at a Starbucks or go grab lunch or dinner with them somewhere. And I'd outline what I was planning on doing. And at that point, I didn't even have a specific deal, but I was able to sit down with them and say, here's my criteria for what I'm looking for in my first deal. I would let them know a little bit about my background. I would let them know a little bit about my vision moving forward as to what the type of deal I was going to do, but how I planned on running it. The business model obviously had to get them to buy in on me, because at the end of the day, the underwriting has to be good and it has to be a terrific asset. But at the end of the day, you're really banking on the syndicator or the sponsor that's leading the project and is what's going to make it successful. And so I sat down and formed a lot of relationships with people. And essentially at the end of these meetings, I would say I wouldn't even say when. I guess I wouldn't even say if, is what I mean to say. I would say when I find the deal that matches this criteria that I've outlined to you, can I count on you for a potential passive investment? And just about everybody at that point would say yes. And so when I was able to land that deal under contract, I already had built up a large database of potential passive investors. So to go out and raise that capital at that point was not very daunting. And it was only, I say only, that might sound like a lot to some people that have never done a multifamily syndication and raised any capital, but it was only $750,000, but I've, done syndications since where I've raised 10 times that amount. So obviously as you go forward, your mindset kind of changes on amounts, and numbers that seem bigger in the beginning get smaller as you gain more and more experience in this business and do more and more deals.
Raised $750. How long did that take you?
It probably took me, well, at that point I'd laid all the groundwork to do it, and I had all the people. So essentially I remember on that particular deal, what I did is essentially at the point at the beginning of the deal, when you're getting people's interest, I kind of, even at that meeting before I had that property, would get a little bit of a pre-commitment in asking them, when I did find this deal, are you potentially interested? But then after I lined up the specific deal, what I was told by some other mentors, another mentor of mine in the beginning and still to this day, and somebody that I've worked with a lot on the finance side of this business, is Paul Peeble from Old Capital. You're probably familiar, of course, with the Old Capital podcast, as probably many of your viewers are. And Paul told me to line up 1.5 to 2 times in projected investor capital what I was actually going to need. So I knew that I needed to raise $750,000. So I remember I lined up in verbal commitments, because obviously until people actually wire you that money and send it to the LLC that's buying the apartment community, there's really no legal or binding commitment other than them having indicated their interest. So I got about $1.5 million in actual verbal commitments. And so when it came time to have people actually send the money in at the deadline I'd set when we were in escrow on that property, it was a pretty simple process at that point, and was easily able to get the $750,000 that I needed to raise in that deal. Obviously, in that deal, I also had some skin in the game. My wife and I, we made a capital investment in that deal as well. So you were talking about that in the beginning, and that's people that want to come in. Some people, I think a lot of it is your background, because, I think that there's, like, for example, Brad's probably the top multifamily mentoring education organization in the country. And one of the great things about the program is that just about anybody can come in and learn the skills necessary to become a multifamily syndicator and do that first deal. However, obviously not everybody that comes into multifamily syndication is cut from the same cloth, has all of the same skills or the same backgrounds. And obviously some people, because of that, are going to be better positioned to come in immediately and become a syndicator on their first deal. For other people, maybe they don't have the background, or maybe they just move at a different pace. And maybe for some of them, moving a little bit slower or passively investing first is a good model and is a way to go. I don't think it's really one size fits all for everybody.
Yeah. So do you do, so it sounds like you probably have relationships with them. So are you doing a 506B as in Baker, or are you doing a Charlie for accredited investors?
No, we're doing for the B, for accredited and sophisticated investors are the types of syndications we do, where we're forming SEC compliant pre-existing relationships before we have any of these deals under contract with people. And primarily the people that invest in my deals are a lot of people that I meet in the Sumrock ecosystem in the program he's created, but obviously a lot of maybe friends or people, family, even people that I've had personal relationships for a long time. Obviously those kind of people usually sit on the sidelines for the first few deals, and then they start to see that you're having a lot of success, and then they start to feel that they're missing out on some of the rewards of that success, and then everybody wants to come in. So I've since had some of my longtime best friends in the world have now jumped into a lot of my syndication deals, as well as other people that I meet at other non-Sumrock events, and people in the industry, and people that are just looking to get in. But I'm fairly choosy as to who I'm going to allow onto my database. Obviously, they have to be accredited or sophisticated per SEC regulations. Even beyond those SEC regulations, though, I certainly want them to be sophisticated, because what I've learned is even if they identify themselves as sophisticated on an investor questionnaire that you have to provide when you're doing a syndication, an SEC document, investor questionnaire is going to be part of those legal documents, and people can check themselves off as sophisticated. They might deem themselves to be sophisticated, but if they're truly not sophisticated, what I've heard ends up happening is that they ask a lot of questions of the syndicator, and then the syndicator is spending a lot of time and answering those questions, where if that person had also invested time and money into their education like I have, then they're going to have the answers to those basic questions as well. So I like to see my investors, unless I have long-standing personal relationships with them, I want them to be plugged into the ecosystem that I'm plugged into, which is the Sumrock ecosystem, because I know they're going to have access to this tremendous education, and then they're not going to be asking me questions. I know they're going to meet the SEC definition of sophisticated, because they're going to have access to, and I'm going to make sure that they understand this before I'm going to allow them to participate in any of my projects.
Yeah, that's a good point, and I think their amount of capital that they have to spend is important too. If they've got $60,000 of spare cash and they give you 50, that puts them in a position where they're really nervous on that money. Whereas if somebody has maybe 500,000 and a good job and plenty of money coming in, they can put 50,000 to you, and they don't need an update, but every quarter when you send them their update. So I think that's a big part of it too. But
yeah, and I've had both. I've had people that have a lot of liquidity, and they invest some, maybe sometimes small amounts, sometimes multiple six figures into my projects. And then, read honestly, I've had people that have put money into my deals and literally told me, this is my life savings and I'm entrusting it to you. So I take that very seriously. Even going back to deal one, I remember that one of my first investors was a woman, and since then she's invested in 3 or 4 other deals with me. And I think she put like $50K into that first deal, the 90 unit that I was telling you about. So fortunately, I've had a track record of success. So I've been able to take that original money that she's done and multiply it for her several times over, where she's been able to repeatedly invest in my deals and also and grow her money as well. So that's a good feeling. But obviously I take that responsibility very seriously as well. I have an underwriting process based off of Brad's teachings, that where I'm going to be realistically aggressive, because I think you have to be a competitor, especially in the market we find ourselves in right now on August 5th, 2019. But at the same point, I see a lot of people out there that I think are overpaying for deals. I think their underwriting is too aggressive. And I'm planning on being in this business for a long time. And that's based on doing the right deals, maybe not always doing the biggest number of deals in a short period of time. And I think a lot of people like to get into this industry. And we've certainly seen it here in the last few years. And they churn and burn real quick. But then they'll hit a roadblock. And then 6 months later, you're asking, where's that person? I haven't seen them in a while. And people come into this industry hot and heavy when things are good. But I think at the end of the day that I look at this as a career business. I'm going to be in this business for a long time. I'm about to do my 10th deal. I've been in this business 8 years. That's not a high number of deals for somebody that's been in this business for 8 years. Now I'm starting to do them at a more rapid race or rapid pace, but even still, it's only a few deals a year because I'm interested in doing the right deals. I'm interested in doing the right deals by myself because I want to be able to stay here and project credibility to people and have a track record of success. And I also want to be able to do right by my passive investors on each individual deal.
So that first one, did you have to bring on a key principal to get that? Because you didn't have any experience yet. So who signed on the loan for the experience?
Right. Well, that would have been, I did every deal. I have to bring in KPs, whether it's for liquidity, usually it's for a balance sheet, a net worth amount, because the lenders are going to want to see the net worth collectively of the KP group be equal or greater than the loan amount in the deal. So obviously you're going to have to bring in, and now I've done deals that have $20+ million loans, and I've done well in the industry and been able to grow our net worth to 12 times what it was when I started 8 years ago, but we're still not going to qualify for a $20+ million deal on our own net worth and our own post-closing liquidity. So even on the bigger deals that I'm doing these days, we need to bring in key principals, KPs, to also sign on the note. And they're people that I've met and formed those SEC compliant relationships with in the mentoring and educational organizations that I've been involved with. Whether it was the one that Brad was with back in 2011 when I first got into the business, and now through people in the Sumrock program. And the reason why people are willing to be KPs on my transactions is that they want to go on to be syndicators in their own right, and signing on another syndicator's note is going to help put them in good stead to get better financing for their own syndication project down the road. So there's certainly an advantage to them. One of my mentors, Paul Peebles, likes to say they get their Fannie Mae country club card by becoming a KP on another syndicator's deal. So I've never had a problem finding people that are willing to sign on the notes as KPs on my projects.
That, if you're not familiar with what a KP is, that is really a great position to be in. If you have the wealth, the net worth, the liquidity, and the experience, of the apartments, or you could have any component of that, you can get a good portion of the deal and become part of the deal just for signing on a non-recourse loan. So that's a fantastic place to be in. And the guys that are in it, they know it's a great deal, and they're utilizing it on many deals. So I'm going to some of your experience of running the apartments. What has been your perception from the beginning that has changed probably the most, today, to where you maybe missed the perception in the beginning?
That's a good question. I don't really know, thinking back, if there's anything that I would do differently. I certainly think there's just, obviously there's a progression as you move through the business. You kind of understand how the pieces fit and everything works, and the relational components of being in this business and building it successfully over a long period of time. And that does change the longer that you're in the business. When I first started, I was making all of my own moves and doing everything on my deals because I was the new guy trying to come in. And now I'm forming beneficial co-sponsorship arrangements where other people are trying to break in, as I did 8 years ago, and I'm leveraging their hustle and their sweat equity. I've done this with a few people now. Obviously, I'm very selective as to who I'm going to partner up with in that regard, because my reputation is going to be on the line with them. So they're certainly going to have to be people that I believe in. And obviously, if I'm raising capital for a project that they're going to lead from my investor database, then obviously you're damn well right that I'm going to believe in them and their capability to successfully lead a project. But I think that that's really it. It's at this point now, I'm certainly still pursuing and doing my own solo syndication deals where I'm the only chef in the kitchen. It's my vision all the way. And I'm going to be the only asset manager working in conjunction with my third-party property management company on that project. But what I'm really trying to do now at this point, Reed, is leverage 8 years of success and a great reputation in this industry and great relationships within the industry where I can leverage other people's hustle and sweat equity, whether it's here in DFW or other top multifamily markets around the country, so that I can plug in and co-sponsor and be on the sponsorship team of more projects. So I really think that that's kind of what I've seen, change over time, is how I'm looking to do business in the multifamily space this time after all these years.
Well, that's a good segue into a couple of things. So number one, I think that's a great point of how, people always ask, well, why would they want to do that? Why would they want to partner with you? We've got, why would you do that? And I think you answered that question, is now you are able to leverage your experience and let somebody else do the hustle, and you can take your knowledge, your experience, your connections, and utilize that to make just as much money as when you were out there running around and doing the hustle. So I think that is a great point that you brought up, and I like the way you said that. And then following with that, what would you look for? So there's several components. You've got the sponsor, you've got the actual deal, you've got the market, you've got the property manager. What are the key things that you're looking for, and how much weight does each one of them have when you're co-sponsoring a deal?
Well, initially, there's just going to have to be that connection, and that I know in this industry, a lot of us like to be able to look at specific data, but sometimes when I'm initially meeting somebody, it's just that gut feeling that you get in your stomach, or you sense that there's a chemistry there that you're going to be able to have. You just connect. You connect. You get it right away when you meet somebody, or you don't. And I'm probably able to. I would probably say that of all the people I meet, and I've been approached by a lot of people to co-sponsor projects. Some of them have some experience in the business, and they're just looking up to scale to the next size of property where they've done some projects, but now they're going to have to raise this much more capital. They might have done deals in the 100 to 200 unit space, but now they're moving up to the 200 plus unit space. So they see the potential value in bringing me on board to help them win the deal, to gain that credibility, because if they've only done smaller deals and they're going to be trying to win a deal from a seller that's selling a larger deal, they're going to want to see somebody with a track record of having closed larger deals, and also the broker will as well. So a lot of people approach me, and I've said no to a lot of people. And I'm very selective as to who I'm going to partner with. Number one, because again, I'm putting my reputation on the line, and I'm going to, if I align myself with that person, be asking my passive investor database to invest in this project. So personally, I'm going to be very picky as to who I'm going to. So initially, I probably end up, 10% of the people, 1 out of 10 that I potentially meet, I'm going to get that good feeling right away that they're aggressive. I see something in them that I think that they're going to be able to be successful in this business. And these are all people that are already plugged into and have invested time and money and education or in the Sunrock program. For me personally, I'm not interested in partnering with people at this point that are not in the Sunrock program. I want them plugged into the education that I'm getting. One thing that is of value to me is somebody that has their boots on the ground in another multifamily market. Let's just pick another top multifamily market and say Phoenix. Let's say I want to break into the Phoenix market. And there are some people that are in the personal mentoring program in the Sunrock organization, and they want to pursue deals in Phoenix. Well, that's a very competitive market, just like Dallas, Fort Worth, and you're going to have some big fish in terms of co-sponsors if you're pursuing 100 plus unit deals in the Phoenix multifamily market. So that's where the value that I bring in can come in. And I might not have the reputation in Phoenix that I have in Dallas, Fort Worth, but I have a lot of contacts in the Dallas, Fort Worth industry that are happy to call their cohorts in Phoenix and vouch for me and give me instant credibility, which can help us compete on deals. And I'm just using Phoenix as an example. Obviously, there's many favorable multifamily markets around the country. So one thing that's of value to me, and you asked, what am I looking at, is are these potential people that want to co-sponsor with me in markets that I would like to break into. That can be of tremendous value. And obviously after they start to look at deals, obviously, yeah, I'm going to have to buy into their underwriting. I'm going to have to believe in their vision on a particular deal. If and when it comes time to move forward on that deal, certainly I'm going to want to meet the third-party management company, and I'm going to have complete buy-in that third-party management company is going to be capable of executing the vision that this co-sponsor has laid out for me, because I'm not going to do anything at this point in my multifamily career that I don't have complete conviction and 100% total buy-in into. And because I don't have to, nothing is worth risking my reputation and my future in this industry and what I've been able to build over the last 8 years. So I think all of those things come into play. It's the co-sponsors, it's the feeling I get from them, the relationship I think that we're going to be able to build, how we're going to work together, the specific asset, where the asset is located, and who the third-party management company is that's going to be operating that asset on a day-to-day basis.
Yeah, so it definitely sounds like, listening to you, that the relationship is by far the first priority. That has got to work.
Absolutely. And I think that in this business, I think that's one thing that I've been able to do is really leverage and build terrific relationships with brokers, terrific relationships with my third-party property management company, where we work together very successfully, understanding and knowing how each other works. And I think that sometimes people get too deep into the details and just lose track of how important relationships are to success in this industry and building those relationships over time. And what strengthened those relationships over time, essentially, of course, is just that longevity. It's the number of deals. It's performing consistently time after time. It's doing what you say you are going to do. It's not burning your bridges on any one deal. Because if you go and burn bridges on any one deal, reputation and word travels fast in this industry, and you might not be doing another deal after that. So I really look at things with a big picture, long-term perspective. Like I said, this is my life. This is a career business for me. I'm in multifamily investing now. I've been here for the last 8 years, and I'm going to be in multifamily investing 10 and 20 years from now. So everything has to be taken with that big picture mentality and looking at it as a long-term lifestyle business.
Are there any common mistakes you see people coming up to you for the first time that you see, like one common trait or thing that they're doing that's wrong or incorrect?
What I think that I probably see, and maybe it's just a way of doing business, but first and foremost, I see myself as a deal sponsor. I'm a syndicator. I'm going to let my third-party property management company run with the vision that we outline for that asset upon acquisition and then upon takeover. And then I'm going to step back from above and be what I am, which is a deal sponsor syndicator. And I'm going to work on growing my portfolio. With that being said, I'm always in close communication, and I'm certainly holding my third-party property management company accountable for certain performance things. But I'm not going to get into their business as long as they are performing at the numbers that we've agreed upon. If they're not, then there's a problem, and I have fired a third-party management company before I brought on the current one that I've been with for a number of years, for non-performance for that exact same reason. But I think what I see is a lot of people get in, and I think they're way too involved and in touch with the on-site management at their specific properties. And it's essentially as if they are the management company of their properties. And that's not my business model. And I don't think it's the business model that I've been taught in the different mentoring and education organizations that I've been involved with. Again, I'm primarily first and foremost a sponsor, a syndicator. I'm going to put together projects. I'm going to outline projections to investors, and then I'm going to do whatever it takes to hit or often exceed those projections. But at the same point, then I'm going to be building my portfolio and creating and sponsoring more potential passive opportunities for people to invest in. And I'm not going to be a hands-on day-to-day property manager. That's why I have a third-party property management company, and that's why they're paid to do that role. And that's why, using my specific third-party management company as an example, they oversee 22 plus, I think it's actually now 24,000 units. The president of the company would correct me if he heard me say 22,000, but I think it's 24,000 now. So they know what they're doing, and they do a damn good job. So I'm willing to step back, and as long as they're hitting or exceeding the performance standards that we've agreed to, I'm going to let them run the property. I'm going out there to form mutually beneficial relationships with other people, to syndicate and sponsor more projects, to bring more opportunities to my passive investors to the table for them to consider. And that's what I regard as my role. So I think some people come in as syndicators. You were asking what the mistake is, and I think they're way too down into the details of their property. There was a great business book. I'm sure you're a big reader like me, Reed, and one of the best business books I ever read was a book that came out in the mid-90s called The E-Myth. Yep. By a guy, Michael Gerber, and E stands for entrepreneur. And in that book, Gerber talks about why he thinks a lot of entrepreneurs fail. And usually it's because they're just too down in the details of their property, and they don't understand how to scale and grow a business, and they burn themselves out. And eventually what they end up with is a failed business. And I really embrace the model as taught to me and as modeled by Brad, and he's done it very successfully. And I've been able to follow in his footsteps and watch his continued growth, and he's been able to watch my continued success, and that's why we've stayed aligned over these years. And just to make clear, I'm not employed by the Sumrock organization in any way. There were 2 years in there where I did work as a buyer's agent under Brad's broker's license, helping people in his program acquire deals. But that was back in 2013 through 2015. I left that post in March of 2015. And since then, I have I'm not employed in any way, shape, or form by Brad. So if I speak glowingly of the organization and what I think is there for anybody that wants to get started or grow as a syndicator, or even just as a passive investor, or a combination of both in multifamily, it's only because I really believe in what he teaches. It's because I believe in the program. And I think that my track record over the last 8 years is the proof in the pudding as to that.
Well, it's clear you've gotten a great deal of value from everything to do with this program, and so that's great. I do have one last question before we wrap it up. You were talking about the property management and backing off and giving them their space. So how often do you follow up with them? How often do you go to the property and walk the property? What are you using to keep tabs on them, and what KPIs are you using?
Sure. Well, obviously, I get monthly financial reports, which I thoroughly review. And then if there's things that I feel need to be discussed, then we'll have an individual conversation about that. But beyond that, we have weekly maintenance calls on all of my different properties. And as far as visiting the property, I think that's where's the property at. Obviously, upon acquisition and takeover, in addition to just taking over the property, there's typically going to be a large capital improvement right at the beginning, where we're going to go in and do things that are going to drive revenue, or we're going to come in and improve the property. And that's usually at the onset. I'm usually working with an outside. I work with my management company on the interior upgrades. But other than that, I typically work with an outside general contracting firm that I have a lot of experience with as well. So obviously I'm going to be meeting them at the property often upon takeover. So initially upon takeover, I'm at the properties pretty frequently. And then as you move out, especially once you get the property stabilized and it's really humming along, then I'm going to be at the property less and less. If I've had a property for a few years and we've already instituted everything, and at this point it's just turning and improving units and that property is stabilized and is performing well, I might go to that property about once a quarter.
Okay, good answer. So Aaron, tell me, how can somebody get a hold of you if they need to, and how would they reach out to you?
Sure. Well, what I would really encourage them to do is just to honestly read, come to a Sumrock event. That's the best way to meet me. I could throw out my email address, and hopefully this podcast is going to get a lot of views. But given my criteria for who I like to offer passive investing opportunities in my projects and who I would consider potentially co-sponsoring with, that criteria is pretty strict. So if I just throw an email address out there and people are shooting me things from the outside, I'm probably not going to be very receptive to them. What I'd encourage somebody to do, if they're outside of this business and they think they want to get into multifamily, whether they want to be a syndicator or a passive or a combination of both, is attend one of Brad Sumrock's 3 times a year Rat Race to Retirement events. He also does a national conference once a year called NatCon. In fact, this year's is this Saturday in Dallas, Texas, where he's bringing in Robert Kiyosaki as the keynote speaker. But I would encourage you to come out to that event or one of the quarterly events. I'm always there. Meet me there. If at the end of a weekend you've seen enough value in the program that you think I want to be in multifamily investing, then I'd recommend you join the program, and let's build a relationship there through the program and get to know each other. And if you potentially want to be a passive in one of my deals, as we get to know each other, then I'll add you to my database, and you can learn about the potential opportunities that may exist passively in any of my projects. Or if you think that you would be a good fit to potentially co-sponsor a project with me in the future, let's build that relationship there. So not to deflect the question, Reed, but I don't really see a lot of value in a lot of people just watching this podcast and reaching out to me anonymously, because honestly, one thing I am is a straight shooter. I hold back. I tell people what I feel, but I'm also very loyal, and I do what I say I'm going to do. And if I commit to something, it's going to get done. So I would rather just be honest in answering your question than just throw out my email address and have people send me an email that I may or may not even have time to answer. So I would, again, not as a shill for the Sumrock organization, but just because it's been the foundation upon which I built all my success, I'd say come out to one of the Brad Sumrock events and let's meet there. Hopefully you can join the program, and then we can build the relationship where we could potentially do something together, whether on the passive side or potentially on the co-sponsorship side of things.
That's perfect. Well, I appreciate you coming on, Aaron. It's been a pleasure interviewing you, and look forward to following your success in the future.
Sounds great, Reed. Thank you for the time today. Appreciate it.
All right. Thank you.